Buckle up because we're about to dive into the thrilling world of corporate earnings. Just slightly more exciting than watching paint dry. Investors always keep a close eye on corporate earnings announcement, but this quarter it's like they have a magnifying glass out. They're searching for any clues about whether the economy is hitting the brakes or speeding up. In the next few minutes, we'll break down the earnings outlook and explain why long-term investors should focus on these trends instead of getting caught up in the daily roller coaster of the stock market. Now let's get to it. First things first, the stock market is like a puppy on a leash. It tends to follow corporate earnings wherever they go. Check out this chart to see what I mean. Now, while everyone's busy obsessing over the economy, remember, we're not investing in the economy directly. We're putting our money into the stock market, which is all about how companies perform. And how do companies do well? It depends on the economy, of course. Things like consumer spending, jobs, inflation, and more. It's all connected like a giant economic soap opera. This chart also gives us a sneak peek into the wild ride of the stock market swings. When times are tough and the market dips, a strong economy can act like a safety net, keeping stock prices from completely tanking. If the stock prices drop while earnings are still solid, they actually become more attractive. It's like finding your favorite bourbon on sale. Jackpot. Now, things get trickier if the market falls because of an economic shock or a recession. That's when bear markets come into play, prowling around during uncertain times when the earnings outlook is a little foggy at best. So what's the big takeaway? Corporate earnings are super important for long-term investors. They're like the North Star, guiding us through the stock market's ups and downs. Stay focused on these earnings trends and you'll be better equipped to navigate the financial seas. Let's dive into another chart. This one shows the earnings growth rate for the S&P 500 companies since the mid-1980s. It's like a roller coaster, but with less screaming and more data. Look over here on the right. You'll see that the earnings hit a rough patch the last few years, but they started picking up speed again in the third quarter of 2023. It's like that moment when your favorite TV show finally gets good again after a few slow seasons. The steady economic growth is finally trickling down to boost corporate profits. Why does this matter? Well, a lot of important financial measures depends on these earnings. Take the price to earnings ratio, for example. This ratio has been climbing over the past 18 months because the market has been on a tear. It's now around 20 times forward earnings thanks to earnings growth being stuck in neutral for a while. But here's the good news. With earnings growth picking up speed, valuations might start to look more attractive. It's like the market had a premonition about stronger earnings growth and rallied in anticipation. So, to sum it up, keep an eye on these earnings trends. They're like the secret sauce that can make or break your investment strategy. All right, let's wrap things up with one last chart, folks. This one shows economic growth has been chugging along steadily over the past several quarters, despite all the investor jitters. In fact, the number of the times the dreaded R word, recession, was mentioned in corporate earning calls has dropped to its lowest level in 2 years. And according to the Federal Reserve of Richmond's CFO survey, corporate execs are feeling pretty optimistic about the economy. Now, while these figures can change faster than your favorite streaming service's content library, they're looking pretty positive right now. Steady economic growth is translating into better corporate profits, which in turn helps support the stock market. So, the big takeaway here? Focus on these longer-term trends instead of getting whiplash from daily stock market swings. Investing is a marathon, not a sprint, unless you're really good at sprinting marathons. We hope you found these insights informative. If you'd like to chat more about any of these topics, don't hesitate to reach out. We're here to help you navigate the financial seas with a smile.